Hello friends, this is Raman from tradingwithvenus.com. Today I would like to share with you an example of a really easy pivot point trade. We will take a look at how to identify this trade, where you would enter the trade, where your stop loss needs to be, and how you would exit the trade with profit. Here we are looking at a New Zealand US dollar 5-minute chart. The first thing that you need to identify would be your pivot point levels. As you can see here, we have R1 level here, which is the red line, pivot point, the daily pivot, which is green line, and your S1 level, which is the blue line here. As the price moves through these pivot point levels, we are looking for some sort of a rejection pattern at one of the pivot point levels. Here we see the price is coming down. It starts from R1 here and comes all the way into the pivot, the daily pivot, and here it tries to reverse but doesn't really have the momentum or the strength to go up, and as a result drops. Now it comes into S1, and as it's coming into S1, we are seeing all these nice red candles, but then the candles start becoming smaller and smaller, and it tries to push lower once more, but then we see this engulfing green candle. At this point, we have no green candles. Then we start seeing some buying coming into the market, and we see green candles here. So we have the first engulfing candle, which gives us our reversal pattern, which is called railroad tracks. And then we get another engulfing candle here, which is a confirmation that price has some strength at this point and could move higher. So we look for price to hold above this S1 level. We need to make sure the price is holding above. It doesn't just go sideways and continue lower. At this point, as we can see, the price, even though we see a red candle here, it does not go below the S1 level, and we see another green candle. Once you see the price holding above here, so it's been holding above for last 15 minutes because this is a 5-minute chart. So for the last 3 candles for 15 minutes, price has managed to stay above. It's given us a rejection of this level and has managed to stay above S1. This is a good sign that the price would likely continue upwards now. So we can take our entry on close of this green candle here, and our stop loss would go below the low. We just want to make sure that we give it a few pips below the low so that we don't get just taken out of the trade here. So we would enter here, stop loss goes below, and we are looking for price to go into the pivot point here. So that will be the first target, and the next target would be our R1 level. As the price approaches pivot point, we see there's no stopping. It just blows right through the pivot point. That shows that there's good momentum in the price here, and price wants to continue higher. So we would just stay with our trade. And as we get closer to this R1, price doesn't quite get there, and price starts to go sideways. Once we see pins like this, we have engulfing candle, price is just going sideways. This is a good time to exit the trade, because at this point, price does not have the same level of momentum that it did once it was moving upwards. So we just exit our trades once we see engulfing candles, bearish engulfing candle. Our trade is done at this point. So from start to finish here, the price moved up about 97 pips. However, because we were looking for confirmation before we entered our trade, we lose a few pips, and we lose a few pips up top. So our profit in this trade from beginning to end, entry to exit, would be 70 pips or $700 if you're trading one standard lot. Trades like this are really easy to take. They're easy to identify. So I would suggest you go practice. If you want to take this trade, go practice. Look at these pivot point levels and see if you see a rejection pattern. And when you do, try a demo trade and see how it goes. If you would like to learn more profitable Forex trading strategies like this one, please visit my website, tradingwithvenus.com/Forex course. That's it for now. I will see you next time.